Welcome back, folks. It looks like it's finally happening. Donald Trump is now talking about creating an external revenue service, and United States Congress are pushing to abolish the IRS and replace the U.S. tax code. It's seeming increasingly more likely that Donald Trump will end income taxes on Americans and replace them with a consumption tax. I would, along with many other people, probably be very supportive of this, especially if you understand macroeconomics and have a good understanding of the way that tariffs work. Trump came out with a post on Truth Social, ladies and gentlemen, and he said, "For far too long, we have relied on taxing our great people using the IRS. Through soft and pathetically weak trade agreements, the American economy has delivered growth and prosperity to the world while taxing ourselves. It is time for that to change. I am today announcing that I will create the External Revenue Service to collect our tariffs, duties, and all revenue that come from foreign sources. We will begin charging those that make money off of us with trade, and they will start paying, finally, their fair share. January 20th, 2025 will be the birth date of the External Revenue Service. Make America great again." Take a look at this. United States Congressman Buddy Carter has just introduced the Fair Tax Act of 2025 to abolish the IRS and replace the U.S. tax code. The new proposals, of course, would seek to simplify taxation by embracing a consumption-based system. The Fair Tax Act proposes replacing the U.S. tax code with a national consumption tax and abolishing the IRS, also known as tariffs. The act is backed by several Republicans and includes provisions affecting immigrant taxation. Representative Earl Buddy Carter has proposed eliminating the IRS and replacing the current U.S. tax code with a national consumption tax through a bill known as H.R. 25, the Fair Tax Act. The legislation unveiled on January 9th would eliminate all personal and corporate income taxes, death taxes, gift taxes, and payroll taxes, while implementing a single national consumption tax system. One of the most noteworthy aspects of the fair tax is its proposal to eliminate the IRS, thereby simplifying tax administration and compliance for individuals and businesses. Cheers, my friends. I think anybody should be able to get behind this. Let's take a look and see what he says here on the Joe Rogan Show on tariffs.
Unless they pay a big price, and the big price is tariffs. And he'd speak like that, but he was right. And then around in the early 1900s, they switched over stupidly to, frankly, an income tax. And you know why? Because countries were putting a lot of pressure on America. We don't want to pay tariffs. Please don't. You know, they, believe me, they control our politicians. If you look at the kind of numbers that these guys make then and now, but we had a commission meeting in the I think it was 1887. Think of this problem.
That's right.
We were so rich. We had so much money. We didn't know what to do. So they set up a blue ribbon commission on tariffs. And the sole purpose is what to do with all the money we had. We were so rich because we were taxing other people for coming in and taking our jobs. And China does it. That's what China did. If you want to open a factory and sell cars, if you build a factory here or have a factory, they don't take our cars. They wouldn't take our cars. But if you build a plant in China, you can do that. Elon did that. By the way, Elon is great. That guy is such a great guy. I think you're a fan of
love
Elon.
him.
He is from a different planet. He's the greatest guy. That rocket coming in.
That's fantastic. But I could definitely get behind this. And as we're seeing here, the House GOP bill aims to abolish the IRS and rewrite the tax code. Trump says he will create an external revenue service agency to collect tariff income. The stability of the IRS faces yet another challenge as the U.S. presidency changes hands. And in case you were unaware, just moments ago, today, January 17th, the IRS chief has announced that he will step down upon Trump's inauguration 2 years before his term expires. The announcement follows Trump's decision to replace Biden's top tax collection official. Now we've seen Gary Gensler, the Securities Exchange Commissioner, stepping down tomorrow, January 20th. We've seen the CFTC, the head of the Commodities Futures Trading Commission, Rostin Beanham, stepping down January 20th. The IRS chief stepping down January 20th. No more Danny Werfel and his 87,000 new IRS tax agents. The head of the IRS will step down after President Trump's inauguration Monday, despite his term not expiring until 2027. IRS Commissioner Werfel told staff his early departure would be the best thing for the agency, given that Trump has already announced his intention to install a replacement. He could have stayed in the role and forced Trump to fire him, but said his discussions with IRS employees, Congress, and Trump's transition team and other stakeholders led him to take a different approach. Ladies and gentlemen, let me know what your thoughts on this. Should we keep income taxes? Should we keep the IRS? Should we keep corporate taxes and payroll taxes, gift taxes, death taxes? Because we are taxed every single time we do anything. You work, you get paid, you pay income taxes. You've already paid money on those. And you go to the store, you have to buy something, you pay sales tax on the money you were already taxed. You live in a home, you have to pay property taxes just to make sure that you don't get kicked out of your home. You're basically renting your home from the state in order to make sure that you can continue to live in it after you've already paid income taxes. You receive a gift from somebody that already paid income taxes, well, you have to pay taxes on that gift tax as well. Somebody dies, no, you have to pay death taxes, inheritance taxes, and so on and so forth. We are looking at tens of thousands of pages worth of code in the IRS tax code system that is purposely obfuscated and made extremely complicated so that people can be audited and the IRS can come after us. But it would be a lot easier for all of us to pay a consumption tax instead of being taxed every single time we receive or gift any money. Trump has named former Representative Billy Long of Missouri to lead the IRS. Commissioners are nominated a 5-year term so that they do not directly correspond to presidential turnover, though federal statute dictates the agency head may be removed at the will of the president. And as you can see here, Werfel is in the midst of transforming the IRS, mainly by hiring 87,000 new agents using the $60 billion from the 2022 ironically named Inflation Reduction Act, which actually cost Americans so much money that it increased reduction. But just like everything else in the Biden administration, the names were purposely switched around to make it seem like a good thing. Much like the, well, he wouldn't be the first one to do that, let's put it that way, including by boosting customer service, modernizing technology, and ramping up staffing dramatically to increase enforcement on what they claim to be wealthy individuals and corporations. But we have seen that over 63%, this is not a made-up statistic, this is a fact. You can look it up, use AI, use Google. 63% of all audits by the IRS this last 2024 were up against people making less than $150,000 a year. Poor people, middle class people making less than $150K a year. That's more than 2/3 of all IRS audits were against your everyday middle class folks. And Trump has now stated that he is going to come out and use the External Revenue Service to collect tariff income. He said, "We will begin charging those that make money off of us with trade, and they will start paying." He compared his planned creation to the IRS, which is the nation's domestic tax collector. Now you see here, the creation of a new agency requires an act of Congress. The good news is here, folks, Republicans hold the majority in both the House and the Senate. Trump has come out and vowed to shrink the size of government, would be creating the new agency to do functions already handled by existing agencies, including the Commerce Department and Customs and Border Protection, which collects duties and revenues from other nations. And of course, you guys already know he tapped two business titans to lead the Department of Government Efficiency. And now, in case you didn't know, Ron Paul is going to be working there with Elon Musk and Vivek Ramaswamy in order to head the Department of Government Efficiency, the non-governmental task force assigned to fire federal workers in order to save America. And I could definitely get behind this. Let's see what else he's got to say about it.
But in fact, Kamala cast the tie-breaking vote to hire 87,000 new IRS agents to go after your tip income.
A lot of people don't know that, but that is also a fact. There was a tie within our government. And of course, Kamala Harris, as the vice president, was the tiebreaker of it. And she voted yes to hiring those 87,000 new IRS agents in order to come after the middle class and the American people. This, of course, was part of the Inflation Reduction Act, which, as I stated, did not reduce inflation. It actually dramatically increased inflation as it added hundreds of billions of dollars to our already overburdened nation's debt.
Going after it in a lot of ways, so I don't know what they're doing now. This has happened with a lot of industries. When we come out with something, they immediately fall. But you know that after the election, if something horrible happened, which is always a possibility, especially the way they cheat. But if something horrible happened, you know that you'd go right back and you'd never see anything about no tax on tips. You know that. Under Kamala and Crooked Joe Biden, where is he? Where's Joe? What happened to Joe? He's on a beach someplace. He's angry. The IRS has imposed costly and burdensome new reporting requirements on restaurant and other employers, and these employers are great people. They're great people. They really work hard. Like Javier, they work very hard and they do an incredible job. And this is going to make their life a little bit easier because, frankly, for them it's a lot better too when they have happy employees that are making a little more money and just do a better job. People like Javier are very happy. He was happy to hear about this. Every restaurant owner is happy to hear about this. But they're trying to squeeze every penny out of this tip income the government is. And now they're not going to be able to do that. We're going to get this done very fast too, by the way.
Amen. God bless. God bless it. Everlong says we should have state and local taxes only. Very good point, my friend. That should definitely be the case. If we are buying things, we should then be paying a consumption tax through tariffs, through the elevated cost of those items, and take home 100% of our pay for individuals and corporations also. There is a massive corporate tax that small businesses have to pay. And it is a massive issue. Unemployment taxes, corporate taxes, Social Security taxes, Medicare and Medicaid taxes, and so on, right? Nick Lopez, you're asking, what happens if I didn't file my taxes for 2023 and now 2024? Oh, well, I can't really answer that. We're going to have to wait and see how this all pans out. But as you can see here, the former Congressional Budgetary Office director says tariff impact would cause Canada's economy to enter a recession. Former SIBO director Doug Holtz-Eakin explains the impact that tariffs would have on the Canadian economy and shares thoughts on Trump's agenda and the House speakership vote. People need to keep in mind that this guy from SIBO is the same one that has been helping to fudge the numbers that come out to the American people every single day. As you guys know, Trump has announced the creation of where did it go? There it is. The creation of the External Revenue Service, as we've been discussing. And he claims that, of course, it would be tasked with collecting revenue from tariffs, but economists, basically leftists, are pushing back and noting that U.S. importers bear the brunt of the cost of tariffs rather than firms overseas. All right, we already read this. He's announcing the External Revenue Service. And they say, so you guys know, tariffs are taxes on imports, which in most cases are paid by the U.S.-based importer to an existing federal agency. That dynamic has prompted pushback from economists who say the name of the proposed External Revenue Service represents an effort to obscure who pays for tariffs. The president may try marketing his higher tariff agenda as an external tax, but messaging does not change that higher tariffs will be paid by the people and businesses in the United States who import goods. Erica York, vice president of the Tax Foundation, told Fox Businesses. Tariffs are not external revenue. They are taxes on U.S. importers that shrink both the U.S. economies and U.S. incomes. Higher tariffs will create a drag on the U.S. economy and will threaten to offset the benefits of tax cuts elsewhere. They should not be relied upon as a major source of tax revenue, York explained. Well, this is where she's actually entirely wrong. If the United States government comes out, which again, it can happen because the United States House and Senate are now held in a majority by Republicans, they could very well abolish income taxes, corporate taxes, death taxes, gift taxes, payroll taxes, personal and corporate income, and replace them with a national consumption tax. And the national consumption tax would be paid in the form of tariffs on overseas imports. Those overseas imports would increase the cost of some goods that are made outside of the United States. But of course, Americans would get to keep over more than 1/3 of the income now, which is being wiped away essentially by the IRS before most people even receive their check. And you can see here that they claim that the agency name is more branding than substance and misleading branding. In the vast majority of cases, parties in the U.S., not foreign external sources, pay U.S. tariffs and, as confirmed by several recent studies, bear the economic incidence too. Declaring tariff revenue external would therefore be just as misleading as, say, declaring domestic sales tax revenue external because it happened to apply to a foreign-made good sold at your local Walmart. At the end of the day, Trump could call it the foreigners pay the tariffs agency, and it still wouldn't change the fact that Americans really are, Lincecum said. I will fight against Lincecum here and say that if the goods are created outside the United States and there is a tariff on bringing them into the United States, of course, as a business owner of over 2 decades personally, if I had a company outside of the United States making products in China, Mexico, Europe, etc., Asia, I would bring my manufacturing back to the United States and then no longer have to pay those increased tariffs or pass those increased tariffs along to my customer, meaning that more jobs would be brought to the United States. More American workers would be given jobs. And that my products now being made in the United States would be at relatively similar prices to competitors that are being sold in retail stores or wherever they may be online, because there's no longer that extra tariff coming from the overseas. Therefore, my business would actually grow, and sales may grow by being forced to bring the creation and manufacturing of these into the United States. Trump touted his plan to impose an across-the-board tariff of 10 to 20%, as well as a larger tariff of 60% on goods imported from China. And in case you didn't know, ladies and gentlemen, if you look at China right now, and you look on the roads or you watch a video, you will not see a single American car in China unless the person is extremely, extremely wealthy. All of the vehicles in China are made in China because of the incredibly high tariffs that China imposes on foreign goods and foreign automobiles. We would essentially be doing the same thing, meaning that we would no longer be importing Kias from Asia. We wouldn't be importing Fords assembled in Mexico. We wouldn't be importing German cars like BMW and Mercedes from Europe. They would have to be made and assembled in the United States, and then no longer would those companies have to charge those tariffs. He also threatened to impose a 25% tariff on goods from Canada and Mexico, which are both parties to the U.S.-Mexico-Canada agreement, a free trade agreement negotiated during his first term as a successor to NAFTA, which, in case you guys didn't know, immediately after announcing this, both Mexico and Canada agreed to stop allowing illegal immigrants flow over the borders. Tiffany says, food is going to skyrocket. I mean, methodically, this can work. It's just going to take years to be a good thing, like several years from what it sounds like. Food is already skyrocketing. If you look at your bills right now, your grocery bills, and mine, for example, it costs 100% more today than it did 4 years ago to buy the same exact groceries at the grocery store for my family. And my income taxes haven't gone down. Neither have the corporate taxes that I pay on my businesses or the payroll taxes that we match for our employees. Our Medicare, Medicaid, Social Security taxes have not been reduced. Our property taxes have increased significantly. I think you get the idea. If you got to take home all of the money that you're currently spending on federal income taxes, I don't think it would be such a big deal to have to pay a little bit more for foreign imported items. His campaign platform included income from tariffs as a source of tax revenue to offset proposed tax cuts and spending plans. And of course, these very same tariffs here would offset and simplify the taxation that is occurring right now on everyday Americans in their income taxes. Trump's transition team signaled that he plans to sign a slate of executive orders upon taking office, as the new presidential administration does. And the ERS will be created on Inauguration Day. So all of this, for me, in my opinion, is good news, because the status quo has been in place since 1913. The status quo of being able to tax everybody in an unlimited way through income taxes by the federal government has not been working. And we can see here other nations' leaders are also backing the idea. Here's President Bukele.
For instance, the financial situation of the United States. When I talk to my conservative friends right here, they always tell me that the problem is high taxes, but they're wrong. Of course, high taxes are extremely high here in the United States. I give you that. You're right in that. But that's not the real problem. The real problem is not the high taxes themselves, but the fact that they are not even really funding the government. But even those high taxes, higher than a lot of places in the world, but even those taxes are really funding the government. So who's financing the government? Government is financed by treasury bonds.
Indeed.
Paper. And who buys the treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. But what backing does the Fed have for that money being printed? The treasury bonds themselves. So basically, you finance the government by printing money out of thin air. Someone could ask, well, Well, so if the government can print unlimited amounts of money out of thin air, why did they collect taxes?
He's got a good point, doesn't he?
I mean, in theory, it would make sense, right? If they can print unlimited amounts of money, why would they need taxes for? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking, but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst.
Absolutely. We're already
The
seeing
situation
it
is
beginning.
even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar will fall, and the Western civilization with it. If the next president of the United States doesn't make the necessary policies and structural changes, sooner or later that bubble will burst. There's still time. You don't have to make the same mistakes we did in the 60s and the 70s. You can still jump before the water boils.
On point. Absolutely on point. And I got to say, I'm reading your comments and I see a lot of people with very great points. Everybody's got very great points on here. Larry Garcia says, I just bought a 2023 Peterbilt and I don't think it's got any American parts. And new parts are through the roof if needed. It's all effed. Tiffany, I see you saying, I wouldn't think it would be a big issue if we didn't import so much, like almost nothing is made here. I'm with you, boss, ugh, but I'm really just looking at this objectively. And I totally agree, Tiffany. The thing is, the reason that things aren't made in the United States is because of the globalist agenda. The World Economic Forum and the deep state have been working together for decades, since the late 90s, since the Bill Clinton administration, in order to globalize and export jobs and manufacturing out of the United States. And this right here, this would bring more manufacturing and creation of jobs back into the United States. That means that more, of course, more things would be made here. And I could definitely get behind that. So with that being the case, this act, the Fair Tax Act, proposes eliminating the IRS, repealing federal income taxes, as well as corporate income taxes, estate taxes, gift taxes, and payroll taxes, and implementing a single national sales tax. I could get behind that. I have no problem paying for what my family and I use, for paying for what my businesses use. I think that's fair. And it's also, of course, you guys refer to as a consumption tax, which would be applied to the sale of goods and services, which would be fine. Because if I use a service, if I use goods, I should have to pay taxes on it. As a matter of fact, we already do. You people seem to forget that. When you buy something at the store, you're already paying federal and state sales tax. And on top of that, we're already being charged in income tax as well. So I'd rather get to keep our income and pay a little bit more in federal and state sales taxes. So now there's some challenges, right? When we would have to be revenue generation. How would we generate revenue? Transitioning to this national sales tax would require, of course, a careful calibration, if you will, to ensure that it's generating sufficient revenue, comparable to the current system of income taxes. And the tax rate would need to be set at a level sufficient to fund the federal expenditures without creating unnecessary burden on consumers, right? Then we would need to think about, we thought about revenue generation, then we need to think about the economic impact of this. In a consumption-based tax system here, the single tax for sales would have obviously varying effects on different income groups. Lower income individuals tend to spend a higher proportion of their income on consumption, potentially making the tax more regressive in that sense. But in order to mitigate this, the proposal includes a rebate system to offset taxes that have been paid on essential goods and services. So lower income individuals could receive tax offsetting rebates as well. So then we got to think about 3, the implementation of how this is going to happen. So the logistics of this would be basically mean establishing a whole new collection of tax framework through the External Revenue Service to replace the IRS, which would, of course, require significant logistical planning. And this would need new mechanisms for collecting the taxes at points of sale and ensuring compliance across the various sectors. And that's the whole purposes of the External Revenue Service, to collect it from importers and not from the American people, as in the IRS is currently doing. Now, enacting this sort of change would require substantial political support. And from what I'm seeing in the comments here, what I've seen on Twitter and YouTube and all across the country, is that there's substantial political support and support from the people for this. And the House and Senate also have the majority in place already in order to help push this along. So given the complexities involved and the potential opposition here from the deep state and various, stakeholders, it would be a considerable challenge, but far from impossible. And so the framework here to have a national sales tax and implementation of it would, of course, be challenging, but it would not be impossible. I don't think it would be impossible whatsoever. And for example, the 16th Amendment, I'm looking it up right now, the 16th Amendment to the U.S. Constitution, ratified in 1913, explicitly authorizes Congress to levy income taxes. Eliminating the income tax would require repealing the 16th Amendment or amending it, which is, of course, a complex process that requires a 2/3 majority in the House and the Senate, followed by ratification from 3/4 of the states. But as we've seen, that is probably something that is doable now, as a significant portion of the Democrats are no longer towing the company line, as one might say, with the deep state agenda. Yeah. But let me see here. Ryan says, well, wouldn't the sales tax have to be huge to make up for the $20,000 in income taxes I'm no longer paying, like 50% or higher? Well, my friend, I don't know exactly how much that would have to be personally. But if you're somebody who doesn't consume a lot of goods or services, you're still paying those income taxes. So why should you have to pay the same amount in taxes that somebody else that does consume a lot of goods and services has to pay? Food for thought. Oregon Wild Boy says they tax us on already taxed money. Super Castberg says, who pays for the road to drive on? My friend, you pay for that with your property taxes already. Your property taxes pay for the roads, the utilities, the fire, police, and EMS. That's the whole point of property taxes to the state. So that's not something that would be affected either. Not to mention, they also receive federal subsidies. Bjorn says, so everybody will pay sales tax on everything. Businesses will collect sales tax on everything they sell. The difference is paid to the government. Yes, Bjorn, I got to say that we already pay sales tax on everything, my friend. We already pay sales tax on all goods and services, and businesses must collect those taxes already. So if they have to just simply increase that while abolishing all of the money that we're already paying in income taxes, corporate taxes, payroll taxes, gift taxes, death taxes, etc., I think that would be more than adequate. Eagle Eye Production says, boss, this stream and your explanation made the tariffs and made in America again make sense. I hope so. I hope so, my friend, because it does make sense. It absolutely does make sense. This would definitely bring jobs, manufacturing, and goods, the creation of goods, back to the United States. Oregon Wild Boy says, my roads suck, though. Yeah, my friend, you should probably look into your local city and state and county municipalities for that, because that is directly paid for by them. That's not a federal government issue. And Jeff says we need to start somewhere, and this is a good place to start. Well, that's correct, my friend. So yes, Wild Boy says we should absolutely incentivize being made in America, and I completely agree with you. Terry says, I love Bukele. Yeah, the guy is a very intelligent individual, and I could very much see this being something good for everybody. And now here's the other thing. People are talking about illegal immigrants not paying taxes. Well, here's the good thing about this. You don't have to file your income taxes in order to pay your taxes, because the proposal, spearheaded by Representative Carter, would dismantle the current tax code and replace it with a single national sales tax. That consumption tax would be paid for by everyone, including illegal immigrants. So anybody who's wondering, hey, illegal immigrants should have to pay their fair share, people working with fake Social Security numbers or getting paid cash under the table don't have to pay income taxes. How is that fair to me as an American who has paid taxes their whole life, or as an immigrant who came to this country legally and pays taxes legally? Well, that would no longer be an issue, because anytime an illegal immigrant goes to the store to buy something or receives a service, they would have to pay the taxes up front. And as you guys, in case you guys didn't know, in 2023, the Fair Tax Act was brought up in front of Congress. However, at the time, Joe Biden was in office. Democrats held the majority in both the House and the Senate. And this proposal, the Fair Tax Act of 2025, not the one from 2023, comes in a time as the IRS, of course, you can see here, it faces a myriad of challenges, including losing another $20 billion in crucial enforcement funds, potential new IRS leadership, which I have already proven is coming, as the IRS chief has stepped down effective January 20th, because Trump already said he was going to fire him anyway, and appearing starkly at odds with the incoming Trump administration. And as Kamala Harris was the tie-breaking vote to hire those 87,000 new IRS agents, Donald Trump is going to fire those, hopefully, all of those 87,000 new IRS agents. And the Fair Tax Act of 2025 will replace the key federal government revenue sources with a national sales tax and rebate, the very same rebate that I told you that would go towards low-income individuals. This, of course, includes getting rid of all the taxes that I mentioned already: personal income, corporate income, death, gift, payroll taxes, etc. And it would eliminate the requirement for the IRS. And look, here you go. You want to know the percentage? If enacted, the national consumption tax rate would be a tax-inclusive rate of 23% as of 2027. Realistically, economists say that rate would increase to about 30%, according to the Tax Foundation. For every dollar spent, taxpayers would pay the federal government about 30 cents in sales tax. I don't know about you, ladies and gentlemen, but we already pay 10% in sales tax. So if my sales tax went from 10% to 30% on everything that I purchased, and I got to keep 100% of my income instead of having it taken off the top of my paycheck. I honestly don't receive a paycheck because I'm a business owner and I don't get paid by anybody, right? I pay myself. But you get my idea. You or anybody else who receives a W-2 and gets their taxes automatically taken away by the government, by your employer, on behalf of the government, I got news for you. You're only paying half of your taxes. Your employer, right? For example, let's just say my company, Lit Exchange, the upcoming stock brokerage. You work for them, and you pay, let's say $500 a week in income taxes, Medicare, Medicaid taxes, Social Security taxes, unemployment taxes, out of your check every week. Let's just say just $500. Well, you're paying the $500 in income taxes, and Lit Exchange, your employer, is also paying $500 more on top of the $500 that you're paying. So you're paying $500 out of your weekly paycheck. Lit Exchange is paying $500 out of their pocket, out of the corporate pocket, to match the $500 that you're paying. So that's $1,000 going to the federal and state for the federal government, with a small portion going to the state government, depending on what state you're in. For example, I live in the state of Texas, which has 0 corporate taxes. I came from Illinois, which had 10% corporate income taxes. So when my companies were based out of Illinois, I would have to pay the federal taxes and 10% more for the state of Illinois. Corrupt hellhole that it is. I was born and raised there, but could not be happier to leave and bring my businesses along with it. But I digress. If you got to keep that $500 a week, and Lit Exchange got to keep that $500 a week, that's $1,000 more a week in the economy to be spent by corporations and individuals such as yourself, employers and employees. $1,000 more off of one person's paycheck every single week. That could easily cover the difference from 10% to 30% increases in sales and services taxes. And you would still be left with money on top of that. You would still have more money left over at the end of the week if you got to keep your $500, and the corporation would have more money at the end of the week if they got to keep their $500 and then pay 30% sales and services tax. Not to mention doing your taxes at the end of the year would be significantly easier. So of the share of 64.83% of total revenue that would be directed to general revenue, additionally, 27.4% would go to old age and survivors insurance and disability trust funds, and 7 points of that 30% of federal sales taxes. That would be 65% basically would go to general revenue for the Fed, 27.5% would go to old age and survivors insurance and disability trust funds, and 7.74% would be allocated to hospitals and federal supplementary medical insurance trust funds, Medicare, Medicaid, etc. I could get behind this 100%. Ryan Sartell says, so no taxes on capital gains either then. I'm not seeing anything saying that this would abolish capital gains taxes. I'm not seeing that. For the record, for those of you that may be wondering, the capital gains tax in the United States for short-term capital gains in the terms of, say, selling a home, selling crypto, selling stocks, if you own those stocks and crypto for less than a period of 1 year, and homes, I believe it's 2 years, that would be short-term capital gains, and that's a 40% tax rate. If you hold those stocks and crypto for over 12 months, or that home for over 2 years, that would be a 20%. Again, this is not financial nor tax advice. Do your own due diligence. So that's either 20% or 40% capital gains tax. And then there's also state capital gains tax. Here in my new state of Texas, there is 0% capital gains tax. My former state of Illinois had, I believe, 5 to 8% capital gains tax, depending on short-term and long-term. And places like California have in the upwards of 10 to 20% capital gains tax on top of what you pay the federal government as well. So after 2027, the consumption tax rate would vary based on government spending. The combined federal tax rate would be determined as follows. A 14.9% sales tax to cover general fund spending, plus 2 variable sales tax rates that cover trust fund spending as determined by the Social Security. See, some places, some economists in the past have said that the fair tax proposal is unworkable, and leftist institutions like the Brookings Institution argues that the proposed rates would be insufficient to replace income, payroll, estate, and gift taxes, to name a few. And in case you're unaware, let's just go ahead and explain this briefly. This would shift the collection of taxes from your earnings to your spending. So if you save a lot of money and you don't spend a lot of money, you get to keep more money. Under current law, the U.S. collects revenue from taxing your individual income and capital gains tax, among other taxes. Some states also levy a consumption tax. Of course, all states, not Texas, right? But all states have some sort of taxes, property tax, etc. But some also have sales tax on top of that and excise taxes. So the tax foundation indicates that while a consumption tax may theoretically promote savings and investment for some, the tax is ultimately regressive because all lower income households would spend more of their incomes than they save. Regressive generally means a tax takes a disproportionate amount for lower income households. However, as I already stated above, the Tax Act, the tariffs here, and the Tax Act from the External Revenue Service would give a rebate to low-income individuals, thus preventing them from going completely broke or being further burdened by the consumption tax. And think about it, how many poor people that you know spend the majority of their income. This is not meant to be personal in any way, but a lot of wealthy people and people that are well off become that way by saving money and not needlessly spending money that they don't have. So we've already talked about this a lot. Let's see. What does Kiplinger think the IRS can expect in 2025? They can expect a shakeup as the U.S. presidency changes hands. Of course, Donald Trump's tax agenda will be busy this year, they say, starting with tackling the looming tax cliff tied to the Tax Cut and Jobs Act. Trump has also proposed ending taxes on tipped workers, which is coming, as we know, as well as abolishing income tax on Social Security benefits, which should very much happen because these people, these older individuals, have paid into Social Security their entire lives. And the reality of the fact is, if that money were put into a fund that gave them a return on the S&P, they would have 10 times as much money at retirement. So for them to receive 10 times less than they would receive in that sense, simply so that they can get their Social Security, and then they got to pay taxes on top of it, that just doesn't seem right, nor justifiable. The beauty of it also is that GOP lawmakers are going to block IRS direct file, which I think is an absolutely beautiful thing. Because IRS direct file is, in my opinion, a way for the federal government to put their hands in your pocket and prevent you from getting the help of a tax professional or a CPA. Elon Musk is pointing to an IRS workforce restructure. It's got to happen, thanks to Doge. Make it happen, Doge. And they also lost $20 billion in crucial enforcement funding, mainly hiring 87,000 agents to screw over the middle class further. Charles M. said, if I had an extra $500, I definitely would be in Lit Exchange. I hope so, my friend, and I hope more people use some of their tax refunds this year in order to invest in their future through a private equity investment like Lit Exchange, in which you can invest now for a relatively low valuation, and then when the company launches and IPOs in the next couple to a few years here, people will have the opportunity to sell their shares for what we believe to be a significant profit. So that being the case, I think we've talked about this enough. I think I've made my case as to why tariffs and an external revenue service would greatly help the vast majority of Americans. And I'm very much looking forward to watching this play out. So I wish you peace and wealth, ladies and gentlemen. Eagle Eye says, Charles, I know what you mean. It took me a while to get the 500, but I got it, and I'm looking for opportunities for more. Cheers, my friend. I appreciate your partnership. This is, again, the first time in history that retail investors have ever had the opportunity to invest in an upcoming stock brokerage firm before their launch and IPO. This is a world first, thankfully being allowed by the Jobs Act of 2012 and implementations by the Donald Trump administration in his first term. This is a first in the world. No company, no upcoming stock and crypto brokerage has ever given retail the chance to own it before these others like Sequoia, others like Robinhood, etc., have gone to Sequoia in order to achieve their funding, but we prefer to give retail investors the chance to make that money. Cheers. Tiffany, cannot wait to throw this settlement in Lit Exchange. Much appreciated, my friend. We'd be more than happy to be your partner. Very, very proud to call retail investors our partners in Lit Exchange. Have a great weekend, Terry. This is the last weekend that we ever have to deal with Joe Biden, Kamala Harris, and the clown administration that they're a part of. Cheers, my friends. We did it. It's about damn time. Let's make America great again. Thank you, Charles, Terry, Tiffany. Ladies and gentlemen, I appreciate every single one of you for your comments, your support of the channel, Lit Exchange. Very much looking forward to launch, to IPO, and to helping you become filthy fucking rich and avoiding the disgusting market manipulation that is seen every single day via payment for order flow, via dark pools, via the front running of your trades by these hedge fucks. Main Street over Wall Street any day of the week. Cheers.